Morning, everybody. It's nice to be here on the famous white couch. That's the CoinSummit's white couch now. A really good introduction on the panelists. Just a quick point from me. When people ask me to describe what the Bitcoin ecosystem looks like, I sort of stumble around and try and frame it in a particular way, but I end up talking about a reverse pyramid. And is there a more sort of sophisticated financial products which are being built on top of the system? Underlying that is still some critical functions, such as mining and particularly exchanges today. And we're going to talk in a little bit more detail about those exchanges, what they do. But I think it's interesting as a starting point is that, as a parallel financial system that we're talking about here, exchanges play a key role in terms of the roles and responsibilities they have to uphold certain standards, particularly in things like legitimacy and trust and transparency. And those are sort of some of the themes that we're going to explore today with the panelists. So Pamela introduced the guys, but I think it's probably worth just spending a minute talking getting the guys to introduce themselves and a little bit more detail about what their respective exchanges do. So Rich, I don't know if you want to go first.
Sure. My name is Rich Teo, and I'm with itBIT. itBIT, we are an exchange that deals with USD, Euros, and SGD currency pairs. We launched in November last year, and we have offices in New York, Singapore, and Shanghai. Last week, Chad Cascarilla was appointed our new CEO, who is heading up and leading our New York office. We're going to refocus on the US and keep our focus on a global presence, which we think is important in Bitcoin, a 24 hours trading market.
Hi, my name is Jeffrey Smith. I'm the CIO of CEX.io and Ghash.io. Our main people, our main customer base is our miners and traders. And with the concept of the shared credentials between two projects of Ghash.io and CEX.io, we are bringing mining and trading together. And this is what we're focused on right now.
Hey, I'm Jesse Powell, the CEO and co-founder of Kraken. We're a digital asset exchange. Our largest volume is on the Bitcoin Euro pair, but we trade other assets as well, including Litecoin, Namecoin, Ripple, Dogecoin, and Ven. We're the largest exchange on the Euro pair, as Pamir mentioned, and we're looking to get into the United States and other jurisdictions pending regulatory developments there.
Cool. So Jesse, I'll start with you. I know you guys recently published your proof of reserves online. And within the context of transparency, that was a kind of pretty bold first step. Can you talk us through that process a little bit more, some of the decision making and why you decided to do that?
Yeah, so this was just on the heels of the GOX collapse, and the community was demanding greater transparency from the exchanges about their reserves. So we felt we had to respond to that and do something, and there was this proposal out there from Greg Maxwell, and I think there were some other contributors to that. And it seemed like a good way that we could cryptographically prove the proof of reserves to our users without revealing anything personal about them, without violating their privacy. So there is actually another way that the audit could have been done, where you actually do release all your addresses. But we didn't feel that the privacy trade-off was worthwhile, and which meant that we needed a trusted auditor to verify that we controlled the addresses and what the final balance was. And so we asked Stefan Thomas, of the CTO of Ripple Labs, and Stefan was formerly very well known in the Bitcoin community, one of the core developers. And so we thought he would be a trusted guy that could do it. Yeah. So we got it out there. The response was fantastic. We learned some things in the process that I think we would do a little bit differently if we did it again. There have been a couple other exchanges now that have repeated the process. And we like to do it in the future for all the assets we control. I mean, ideally you do everything at the same time, so you have a complete picture. And you know that the exchange isn't trading temporarily one asset for another. But yeah, it's a great thing. I hope that we can continue to do it going forward, and I hope that we can find other trustworthy auditors to help us in the process. And I hope that traditional accounting firms and consulting firms like PwC would be able to be involved in this process in the future.
So what sort of response did you get from various market participants? Was there generally positive, or did you get some interesting kind of left field responses about what you decided to do?
It was a way positive. We did get a couple comments, of course, about how the process could have been done slightly better, or there were some complaints that it wasn't transparent enough, like we should have published all the addresses, and to us the privacy trade-off wasn't worthwhile. Yeah. So, you know, some people had some minor objections to it, but by and large it was positive.
Yeah. So Rich and Jeff, in terms of risk management and transparency from your side, you know, what are the key things that, you know, concern you about, you know, how you demonstrate transparency and legitimacy and trust, you know, not only to the market but to your clients as well?
Sorry.
Go ahead.
Yep. The first thing that I would like to concentrate is communication, because communication is effectively the key to be transparent. If there's a question coming from the users, you have to answer it. You have to answer it in the shortest possible terms and be open about it, and make them understand what is your position and why you're doing it. And after that, well, the second thing is basically being open about your scheme, how you work, how you operate, what are your policies, and stuff like that. And you need to make sure that users understand why you're doing it. It's just not a plain rule like you can't do this, you can't do that. No, we don't work that way. We need to be absolutely open and transparent with all the business details and stuff.
Yeah.
Right. So, you know, for us at itBIT, we want to be as transparent as possible, but I think the underpinning point for that is credibility. So if you just take a snapshot of time, like your balance sheet at any given one point of time, that may not completely represent your through financial situation. So we've been engaging with outside consultants, third parties, our accounting firms, you know, include PwC, that we want to basically be able to publish broadly something that a third party, a credible third party, can verify is true, and it wasn't just something that's a snapshot. It's a continuous process of reporting it. The other thing is, you know, people focus on this on the Bitcoin side, but the other side to really think about is on the cash side as well. We ensure that all accounts, all cash deposited with us is perfectly segregated. We have a list that we are talking to third parties on how to be able to publish that. So someone else besides us holds a list of who has what in what accounts. And so we kind of think that over time, as we get more parties involved, firms like PwC who are actively looking at how they can engage the space, we can more effectively let a third party that's credible publish this data. I think the other point is over time as regulation comes in, when people talk about regulation, they focus so much on the compliance aspect. But, you know, hopefully part of it will also be credibility, like how broker-dealers publish on a monthly basis what their cash balances are, what their customer liabilities are. And I think if there was a standard for that we could go towards, that would be extremely helpful.
Yeah. Are we talking about new standards, or are we talking about matching exchanges and the way they behave and are regulated to existing standards in broker trading and you know, and other issues like that? Are there more demands from the industry, or should there be greater transparency from the industry relative to what's going on in the kind of traditional financial system? What do you guys think?
I think that there are some unique aspects of just about any Bitcoin company that extend beyond what we've seen with the old system. You know, the fact that we're dealing with now, as exchanges, money transmission, which traditionally isn't applied to brokers or exchanges. The fact that we can't know for sure who's on the other end of any Bitcoin transaction. Yeah. We don't have a KYC bank account on the other side. So I think we have to go above and beyond in terms of our approach to compliance, and sort of try to predict what the future is going to look like, and build our systems for that today, and work with the regulators to try to guide them in making regulation that makes sense.
So you guys, I mean, Rich, you're based in Singapore, right?
Right.
You know, so you have a kind of unique perspective on how to operate given where you are in part of the world. What have you seen being in Singapore and being out in Southeast Asia, being so close to China? With
before we go there, just to answer your question, I have a perspective on what should be different, regular financial services companies, that we see today versus what kind of reporting and transparency requirements should Bitcoin exchanges have. And I think one thing that we're seeing the industry kind of turn towards that scares me a little bit is that in the regular financial services world, you have exchanges, clearinghouses, brokers, and assets on any broker-dealer's balance sheets can be lent out, rehypothecated, and someone else could actually own assets that you hold.
Yeah.
And so one of the core values of itBIT is to make sure that we never lend out assets, we never lend it out for any other reasons. We always hold them in cash. They're all unencumbered and unhypothecated, in the financial services sense. So I do think that if exchanges work with those values, that reduces risk management, and transparency and reporting requirements could actually be less and easier and more transparent than financial services companies.
Yeah. Jeff, you got a perspective on that?
Well, my perspective on this is that we need to we have a certain standard put for us by the classical exchanges. We need to live up to that standard, and we need to be able to monitor all the new features, all the new things that can happen to the exchanging. That's not. I'm not talking about brokers or clearinghouses per se, but I'm talking about the features of the new financial system building up, and we are being like a sort of point of entry. And we need to be sure that the users that are coming to our exchanges, they are understanding the process and they are following the path that we're setting for them.
Yeah. I mean, we talked about it a little bit earlier, but to the extent that following the rules means it puts you at a competitive disadvantage, given that we're starting to see a crank up, I think, in terms of regulation over the next 6 months. And again, I don't want to talk too much about regulatory compliance. It's not necessarily the theme, but being competitive and being in the exchange environment and doing the right thing, does it put you at a competitive disadvantage?
Absolutely. Rich and I have both taken an extremely cautious approach, an extremely conservative approach to servicing the world, and in the United States in particular, where I think most of the liquidity exists. And it puts us at a huge competitive disadvantage. Not only are we spending more on legal work, but we're also forfeiting the revenue from these markets. And other exchanges that have just decided to go ahead anyway without the licenses, both don't have the legal requirements. They don't have the legal expense that we have, and they're also generating revenue.
Yeah.
So it's sort of a double whammy for us. So we're at a huge advantage. We've got a smaller runway. We've got a smaller budget. So far, there hasn't been any compliance enforcement, any regulatory enforcement that I'm aware of. But I believe that will come eventually, and that's why we continue to take a conservative approach, because we put our customers first. We don't want them to have a disruption in service. We don't want their funds to be frozen without notice when this compliance enforcement does come in.
Yeah. Comparing the two markets generally, we're here in London, and a couple of months ago we were in San Francisco talking about kind of similar issues. Jesse, I know you guys are making great strides here in Europe. In terms of how the two markets operate, like from your perspective in the areas that you're in, what are the differences you're seeing in Europe versus the US in terms of uptick or transactions, or any sort of perspective on the differences in the markets?
I wish I could tell you. Unfortunately, we're largely not operating in the United States, which means we're not taking customers from most of the country. So our volume that's coming out of the United States is very tiny, and there are only users in a few places, South Carolina, for example, a few states that we're able to service. So it's a really difficult comparison. I would say 99% of our business is coming from Europe.
Yeah.
But we're aware just from the activity that's occurring on other exchanges that the United States is a huge market. Obviously, we'd love to get into it, but it's really no comparison for us. We just don't have the data.
Sure. Jeff, what about you?
Well, actually, we are not operating in the US yet. However, I would say, well, in my personal opinion, is that there is no difference between users from these markets. Well, basically, the only difference would be wanting to be verified, wanting to be able to trade on the exchange. So this is the only thing.
Right. So like Jesse mentioned, itBIT's really conservative as well, and we don't take U.S. customers. But I guess I have a little bit of a different perspective because I'm actually in Shanghai quite a lot. So and we have offices in Singapore and in New York as well. And what I see as a difference, which I think is a long-term good for the community, is that because of, I guess, of regulation, various reasons and speculative attitudes, we're seeing the exchanges and companies in the West in the East, kind of focus a lot more on trading, transacting, and how to get liquidity, derivative instruments, and we're seeing people get used to that. We're seeing hopefully some deepening of that pool. If risk management and things were run correctly, that could be a positive for us as an industry. And what we're seeing, in the West a little bit more is just people more interested in adoption and usage. Yeah. And I would say in Asia, the focus has really not been on how to have a better wallet to use more efficiently. It's been on how to have a more speculative instrument. So hopefully, as two sides of the world kind of build this industry out, it would really be a good combination because people who want to use it more need deeper liquidity. And so I think it's a little bit different in terms of what they're interested in, and I think in the long run that would be good for Bitcoin as a whole.
Does that not also infer that there's a different perspective on what Bitcoin is, right? So here, right. So perhaps in the East, it's seen more as a financial instrument rather than as like a.
I think it's seen very much as a speculative instrument, yeah. where volatility drives a lot of interest, and interest drives a lot of volume. And I mean, that's true of any financial instrument. The higher the volatility, the more speculative interest there is. And there's a very huge interest in how you could speculate and gamble and trade these things. And we've seen innovative exchanges come up with instruments to facilitate that. Yeah. Especially in Asia, because the interest is still extremely high. Despite the gates that certain regulatory authorities have put up to prevent this, there's still a huge underlying demand. And I think that's different in Europe and in the US, where people think of it as a form of payment, a system, and a lot more than that. So you're right, it's a difference in attitude.
Difference in perspective, yeah. I mean, it's probably worth talking about liquidity, because some of the criticism that's leveled that I've heard is that you're talking about a classic kind of liquidity trap, right? You guys are at the coalface of this. Like, how are you viewing whether liquidity is actually an issue in this ecosystem right now, and whether you're seeing, and what are the factors that are going to, increase liquidity over time, like Rich has been talking about? I think
it's probably the single biggest hurdle for any exchange getting off the ground. Liquidity, and liquidity begets more liquidity. It affects the market in many ways, and what the price ultimately is. I see greater liquidity coming in through institutional money, through Wall Street, through bigger traders, hedge funds, and prop trading shops, and family offices. I think to get there, we're going to need some exchanges that have taken a very conservative approach to compliance and have got all their ducks in a row, are doing things the right way, and that these people that are placing other people's money can feel comfortable with putting their money into an exchange. And yeah. I don't think that it doesn't really exist today for the United States. I mean, the exchanges that have the liquidity are the exchanges that are operating illegally, and that hasn't historically played out very well. So I think it's just going to take getting there before we see the next big rush of money coming in from these players.
Jeff, you've got a pretty unique operating model with what you do. Like, how does that play a role in business?
We have a unique business scheme, and that's why we're kind of staying out of the crowd. Yeah. About liquidity, I would like to also weigh in. We're working on a side project, which is called, sort of a white label for exchanges. So basically, what we think liquidity-wise is that we need to have something shared. We need to have something which we can use every exchange, and we are bringing a project which will allow users to open up their own exchange, and with a shared order book, there will be liquidity for all the products we have. And well, this is from this point of view.
When's that? So is that where are you in that particular phase?
We already started.
Yeah.
Soon we'll be able to show a demo on this. And we have a lot of people interested in opening up an exchange, and we're working in order to provide all the models of all the components of the exchange. And CEX.io is a big partner to that because we're going to share this order book as well.
That's cool. That's cool.
You know, I think one of the factors that are affecting liquidity today is what we talked about earlier: trust and transparency.
Right.
I think a lot of the major players, active traders, no longer see, post-Gox, a situation where exchanges are the best source to trade from. I think since then, more and more trading, more and more interest has gone off exchange. And that impact basically causes decentralization of liquidity. And hopefully exchanges that can show some form of trust. I think what Jesse said about freezing funds, I think that's a huge fear for institutional investors. The other huge fear is if your counterparty on a trade could be someone that wasn't properly compliant. That could be bad for institutions as well. So why would you take your funds at risk, your reputation at risk, to trade for an institution when you could rather just find some ways to trade, OTC, and that causes decentralization, which is bad. So I think building trust and building that back on is extremely important. Getting real banking relationships that are actually, and this is not so true here, but even in other parts of the world where if you have a real banking relationship with an established bank, that's an extra stamp of trust where institutions would be more willing to deal with. I think that's really important. The stage we're all in right now is very decentralized liquidity. And we've seen that play out in history, I guess, that over time exchanges start to find ways to centralize liquidity, and that builds out a deeper market. I think the second issue beyond that is infrastructure. A lot of volume and liquidity comes from exchanges trading with each other. And right now, due to lack of that infrastructure, lack of trust, lack of ability to communicate between exchanges, that infrastructure where a client can move money efficiently between, the three of our exchanges doesn't exist. Whereas it exists very efficiently in the financial system. Yeah. So I think building that out and trust would bring liquidity back, in a very strong way in the Bitcoin space. Yeah,
I'll probably come back to the point about exchanges cooperating in a minute, but it'd be interesting just to get some kind of anecdotes to the degree you guys feel comfortable about your relationship with banks and your relationship with insurers. Right, because those are kind of the real life stories of how, the reflection of trust, transparency, and legitimacy is reflected in, right? When you go to banks and you try and build, these types of institutional relationships. Have you got any kind of updates or anecdotes on how you go about kind of doing banking and insurance?
It's a constant struggle for us. We're talking to banks on a daily basis. It's often a long process of educating them about Bitcoin, getting them comfortable with Bitcoin, getting them comfortable with our business, our compliance, the regulatory situation. You can spend 100 hours with a bank and get them completely on board, and then at the last minute, they decide, well, for whatever reason, we think it's too risky or it's not worth it to us. And it's not just, the problem isn't that they're not sold on Bitcoin or they think that the business is risky. They're more worried about what other banks think, because banks rely on other banks for their network. And so that's a fear that we can't really do anything about. I think they've just got to be willing to take a risk. And we're fortunate enough to have Fedor Bank as our partner, and they've been fantastic. I just wish that we could replicate that relationship in other places. And I think it's going to happen. It's just a matter of time. And I think we were close before Gox went down, and that sort of put the freeze on several discussions that we were having, and I think probably set us back, maybe a year in terms of bringing bigger banks into the picture.
Yeah, Jeff, what do you think?
Well, I can say that banks are really scared of Bitcoin. At this moment, but if you propose a plan, if you have a risk management, and you explain how your business works and how you plan to operate this and that, and what if this happens, what if that happens. If you have an open communication with the bank, then eventually they will understand, and some of them will start to cooperate with you. Not everyone. I mean, it's still at the starting stage, but we're getting there.
Yeah. So you've had to kiss a lot of frogs, basically.
Yep. Yeah.
I think the challenge with Bitcoin exchanges getting bank accounts really is trying to prove that you are an exception to the currently perceived norm. And post-Gox, the currently perceived norm was horrible.
Yeah.
We currently have 5 banking relationships that we use. I think it's really important to maintain those relationships. Our primary bank is a major global financial institution. There were very, very stringent onboarding processes, and getting that relationship took an extremely long time, actually, relative to most other banks. But the issue was just trying to prove that you are probably not one of these other things that you read about in the press. And how you go about doing that is really just being extremely transparent about your compliance procedures, being transparent about your KYC AML, being able to show banks that you abide by whatever possible standards that an MSB or money transmitter should really have. And then the other part is just basically trying to prove to banks that your operational capabilities are strong, your cash, your reserves, and everything is strong. And I think getting banks comfortable with that takes a long time, many layers, as you guys I'm sure have been through before. We have as well, and many months. But I think over time banks will see the industry as not all the same type of companies. And I think that would be good for us.
Yeah. I mean, I personally hate talking about Gox, but it seems like we always pivot off into this sort of how long is this post-Gox era going to look like when you go out and talk to financial institutions and things like that. But I think what it does demonstrate is the kind of impact, the sort of legacy impact it can have when a function such as an exchange gets it wrong. What kind of the butterfly effect that has. So talking about consolidation and how exchanges interact, Jeff, are you out by yourself doing this? I mean, it seems like a pretty unique concept you have. What other kind of similar business models are there out there in the market that either you know about or you interact with, and what advantages are there from that sort of interaction?
Well, from a cloud mining perspective, there's a contract-based business models, like with duration, where you give people money, and for example, for a mining contract for like 3 years, and then you get frequent payouts back which is mined new Bitcoins. Our business scheme is something which is much more transparent. We're open to the public, and I really act in the best interest of the exchange to show people that cloud mining and trading is really one concept. And it really is well combined in our business scheme, so that people just mine Bitcoins, they use the processing speed of ASICs, and they are able to trade all these assets on the exchange. And they don't have any difference. So basically what you do is you try to innovate in this area, you try to explain it, and people are very good at understanding it and liking it.
That's cool. Are you out by, what is your sort of level of interaction in the market?
My level of interaction in the market, I would say that I interact with end users. I always interact with end users. I try to find out what is going on, what are they happy about, try to get as much feedback as possible, and I'm always capable of making a change. So if anything, if there are any proposals, suggestions, or things like that, I'm always open to communication and to try to fix all those things.
Sure. Is it inevitable that over the next year, 2 years, you're going to see some consolidation amongst the exchanges?
Maybe.
Inevitable being the kind of key word. Is it inevitable?
I don't think it's inevitable. I think it's still very early. I think it's probably in the next 2 years, maybe more likely, exchanges will just be allowed to fail rather than consolidate.
But to fail without having an impact.
Right, I mean to just wind down, like you've
yeah,
lost your users to a superior platform.
Yeah, so the market, as a consumer, I can choose, I'll just take my business somewhere else, right?
Right, there would have to be some significant synergies realized for a consolidation like that as complete businesses. I think we'll probably see some sort of an ECN developer. We'll see some liquidity pooling, or liquidity sharing, or agreements between exchanges to share an order book maybe, but in terms of like one business merging with another entirely. I don't think that that's inevitable in the next 2 years.
I agree with Jesse on that point. I think we're a little bit early for consolidation amongst exchanges right now. I think from the outside, it seems like we all basically have the same function of fiat to digital, but really on the inside, we're all still extremely different. And what would eventually get us more uniform is some form of, more open global regulation that a set of people actually comply to and a set that don't comply to. So until we draw that line, it's pretty hard for that to happen. And if you mentioned ECNs, and what really helped in that space was standardized laws of trading and narrowing the price range which you can trade at. So the arbitrage opportunity amongst the exchanges right now still remain extremely large.
Yeah.
And when that narrows, the incentive to combine becomes much higher. So when I think it's quite a few steps away, I think what Jesse said just now about combining order books, I'm not sure if combining order books would be the next step, but I think other ways in terms of exchanges cooperating together, I think there's a lot of room for that.
Sure. So so the next couple of years playing out in terms of how exchanges are going to operate and behave and work together, what are the key indicators that are going to move exchanges into the next phase of the way they do business? What do you think are going to be the factors that are going to kind of weigh in on this? Global regulation, I'm assuming, is going to be one of them. But is there any vulnerability? For example, do you see yourselves as vulnerable by doing fiat to crypto, or are you going to diversify a little bit more? Is there, what are those key factors that you're going to push you into kind of working into that next phase of development as Bitcoin develops? Bit of crystal ball gazing, I know, but.
Well, I think of one way we can cooperate, which is called a user experience. This is something which we have basically in common, and in order for all of us to provide the users the same user experience, for users to understand how it works, well, how it's made, what do you do now, how do you start, how do you finish, how do you place an order, and this is something we can just try to cooperate, which is education of new users.
What I would love to see is some sort of a way to share KYC info among the exchanges. Some sort of portable identity that users can just take with them rather than having to go through that process with every exchange that they want to trade at. I think we can also cooperate maybe on a way for users to move funds between the exchanges rather than going out to their bank and then back into another exchange. Those are the obvious ones for me.
Yeah, so just making that user experience a little bit more, kind of elevate the user experience a little bit more, right? Okay, make it easier for everybody to to interact with the exchange from fiat.
Yeah, I think to Jesse's second point, the ability for exchanges to just work with each other, finding a group of exchanges that you trust, and you can basically allow, fund flows between exchanges. I think that's very important, and that's, first step towards some sort of clearing function in the industry that is probably, much further out. But I think that's a very, very strong first step. And, and like I said earlier, that arbitrage opportunity, a lot of it is driven by the inability to move funds between the exchanges. Yeah. And, I think that's a very, very strong first step. I think getting compliance aligned amongst exchanges, that's going to be a very, very tough step, because people talk about compliance, KYC, AML, but KYC is extremely different from one exchange to the next. AML is completely different from one exchange to the next, from one country to the next. Yeah. So when you think about how we operate globally, the regulators we face, and how stringent, whether it's a risk-based or rule-based approach, getting that aligned is not a near-term thing. Yeah,
and especially when there's such uneven kind of regulatory definitions and regulatory standards, right? So there's
every country
views it very, very differently. Yeah. So, okay. Questions for the panelists? Lots of questions. 2 questions. There's 2 gents up here.
Hello, I'm Ron from Mastercoin Foundation. So I have a couple of questions for the gentleman here. First, there's the trend of decentralized exchanges that's being worked on by many different initiatives, Mastercoin, Counterparty, Colored Coins, and others. I was wondering, how do you see that trend competing with or integrating with your exchanges as maybe additional liquidity provisions? And the second question is, I noticed you haven't talked a lot about altcoins and app coins, so maybe a bit about your take on that.
Good questions, thanks guys. Answers coming next time. Do we have time to answer that? We can answer it very quickly. Okay, guys, do you want to answer that very quickly?
Kraken's always interested in taking on new assets. I mean, there has to be a demand there, a market opportunity there to develop, to justify the development cost. But we love to trade all sorts of assets. We're sort of agnostic when it comes to what assets we trade.
I think there's a lot of room for exchanges to work with decentralized exchanges, like you said. I think depending on the type of customer you are and type of transaction that you're doing in terms of size, you may or may not want to transact that way. But I think room for cooperation between exchanges like us and decentralized exchanges is quite large.
Right. Okay. Well, thanks to the panelists for a really interesting 40 minutes. Thanks, everybody.